Hello and welcome to one and all. Yes, it is that time of the week again. Time for Happy Hour with the Lincoln. We're now on episode number 63, and let me give the official cheers to all my good friends out there. This is where week by week I will share with you my triumphs, my tribulations, my glories, and my scars I've encountered over a 20-year trading career in the attempts to help you become a more well-rounded and more profitable and more successful trader. Now, I know you guys here, they always say, look, the summer, it sucks for trading. It's the worst time. Sell in May and go away. I have to disagree because this summer has been one of the best trading summers I think I've ever had. I seriously ever had. In fact, August is my most profitable month of 2018. It doesn't matter if it's the dead of summer, spring, winter, Tuesday, Friday afternoon. The market is open. There's always opportunities. So if you guys are sitting out there, you're struggling, you're like the hamster on the wheel, you're having a hard time taking the next step in the evolution of your trading, right here. Click this link, start trading with us live, and we'll get you going and try to do the best we can to make you a great trader. Now, there's something I want to talk about that it's a little, let's say it's a little off topic, not off topic, just to say it's a little bit different, because we were kind of talking about this in our recent mini camp towards the end, which is something I think is important. And a few things I was looking over my stats, I thought it would be important to share with you. And that is, I find it amazing sometimes, I shouldn't find it amazing because I did it as well, is that how many people that come into trading, and when I say trading, I mean trading as a career. You're coming into day trading because you want to make this a career. How they don't understand the concept of day trading. That's right, you don't understand the concept of day trading. Now, I don't mean that you don't understand what day trading is. So if CNBC walks up to you on a street corner and sticks a mic in your hand and says, do you know what day trading is? You can answer that. You know what a day trader is. You know what day trading is. But do you understand what the concept is? And I think you need to understand the concept because that helps you understand who you are and what you are actually trying to accomplish besides the old watered down thing of, I need some money, okay? So let me explain this to you guys a little bit more in detail. The way a day trader or a profitable, now I want to say profitable, when I say professional trader, let me say a professional trader is one who is trading for income, and that income pays their bills. Now, there's a big difference in my mind between a profitable trader and a professional trader, okay? Because profit just means you made some money. So if you made $1 trading throughout the whole year, you're profitable. You're a profitable trader. You're a winner. Congrats to you, you're a winner. But you're not going to be able to pay your mortgage payment, your car payment, your credit card payments on that $1. In order for you to do that, you're going to need to replace the income that you currently have. So let's say you have, for example, $3,000 a month is how much money you need to pay bills, your expenses and stuff like that. So in order for you to become a professional self-sustaining trader, you have to make $3,000 a month. Now, why does this matter? Because when you watch shows like CNBC, and when you look at 95% of all the people out there on social media pitching their ideas, drawing you up a bunch of charts, taking all these trades, most of those people are not professional traders. They may be good traders. They may be profitable traders. But how many of those traders are solely making a living off of the money they generate from trading? Now, why this is so important to you is I'm not knocking them. But why is this so important to you is because when people come into trading, they fail to understand this concept. And I think this concept is what for me, it's what made me really cross the line in my career. And here's the thing. If you're a swing trader or an investor, you got a spare income, or you got a big balance, you can wait for money. But I'm going to assume that most people are watching this. You have 100,000 or less, probably less than that you're trading on, and you're trying to take that. You always see these people out there with small account challenges, and you're trying to take that small amount of money, and you're trying to take 20,000 or 50,000, and you're trying to make 200 grand a year off of it. That's what you're actually trying to do, and then pay your bills and actually increase your income. If you're going to do that, and that's even going to be remotely possible, you cannot think like an investor, because what's important to an investor is not important to a professional trader, such as profit margins, retained earnings, dividends, how their last quarter compared to their other quarters. These are all things that are irrelevant to a high frequency trader, a scalper, or a professional day trader. Now, the reason I say this as well is because I just recently looked through my stats and my day trading stats. And my average trade time is 16 minutes. 16 minutes or less. So that goes to show you how much, how much difference there is in the opinion of an investor. Because an investor can wait 3 months, 5 months, or whatever for Apple to hit 300. But you can't. If you're trying to trade for income, your mortgage company doesn't give a damn if Apple's consolidating and it'll be 300 by Christmas. They don't give a damn. They want their money now. So how does a person, this is what we're going to talk about, how does a person with limited funds, let's say 50,000, 60,000 or whatever, how do you achieve that? How do you get returns of 100 to 200 to 300%? That's why I said limited funds, because if you got $1 million and you make 20% a year, okay, that's good. You can live on that. You can be patient. But if you're somebody with 100,000 or less, 20% is only 20 grand a year. You're going to struggle paying bills on 20 grand a year if you're most people in America. That's good, but you're going to struggle. So how are you going to take 50 or 100,000 and make 200 or 300,000? There's two things I think that stand out. They're not the only two things, but there's two things I want to share with you. Number one is timing. Everything that a professional trader does narrows itself down to timing, okay? This is why we look at charts. This is why we draw lines on charts. We're not psychos. We're not going crazy. We talk in a lot of jargon sometimes about moving averages, but what we're trying to do is gather data to give us an edge, just a tiny edge, just something that helps us identify where a price will meet, where that price will explode from that point, okay? It's not a hunch. It's not a guess. There's a technical setup that comes with every trader, professional trader, that they have that says this is the likely outcome. So what we have to be able to do, because we have, I'm going to use the word limited resources, but that doesn't mean that we're poor. We're just operating on lower balances. When you're operating on that, the way that you're going to make money is you're going to have max size at the right moment in time. And you don't have a lot of time to sit there and pussyfoot around with a stock play. So you got to get into something, you got to be heavy, and you got to be right at that right inflection point when that stock is ready to explode. Now, you won't be 100%, but most traders can identify that's been trading for a while. That's important for us to have that timing. That's what we operate on. So we're more interested in price meeting certain levels, price lining up on multiple time frames where a potential explosion and accumulation comes into a stock, rather than retained earnings, profit margins, dividends. We don't worry about that, okay? We don't have time to worry about that. That's for our retirement accounts. That's for our investment accounts. This is for our day trading and our money-making account. And we need to be aggressive, and the only way we're going to do that is we have to pile that money in at the right time. Now, that takes some practice. That's why you study chart patterns. That's why we talk about chart patterns. That's why we read candlesticks. Again, some of it sounds crazy, but we're trying to gain data, gain information and confidence to let us know, hey, this is when it's going to work. And for me, that move happens in 16 minutes or less. So when I get into a trade, I should be paid within 16 minutes or less, and that data helps me out. Now, the second part that I mentioned was grinding, okay? You're probably not going to have a book written about you like The Big Short. You're not going to have, hey, I got The Big Short or The Big Buy. Now, you'll have home run trades that you consider home runs, but you're probably not going to have a trade that you make your whole year in one trade. Not going to happen like that for a professional trader. Most of us will grind it out day by day, trade by trade, and minute by minute. Sometimes these trades will be $50 in profit. Sometimes they'll be $2,000 in profit. And again, I think throughout this whole entire year, I think my biggest trade win was maybe 5,000, maybe 5 grand. So, most of my trades are $500-600 tops. But I'll do 3 or 4 of those a day. Yes, I'll have losses in there that equal that amount. But I think you see what I'm talking about. It's not going to all come in one clip. And I think a lot of traders look for that. It's like you're trying to nail, they can try to get aggressive on one specific play, and they get really confident or biased about one thing. And this is what leads to us having trouble. So the second part of that is grinding. Now again, that's not the only two things, but one thing I think this is why this is important and why I'm talking to you guys about this is because you need to know what you're getting yourself into. And it matters the way you look at the market. You see, when I first started trading, I looked at the market the way CNBC looked at the market. I looked at the market the way swing traders like Jim Cramer would look at the market. That can be profitable, like I said, but that's not going to put food on the table every month. That wasn't going to make me $5,000 a month like I was looking for at the time. In order for me to do it, I got to be a trader, like a savage trader. And how am I going to do that? And the way that is done, the two main topics here, and the two main important things is one, you do that through your timing. You've got to be in that trade. You got to put your money down on that trade, and you got to be as good and as perfectionist as possible. You're not going to be perfect to the T, but you got to be as good as you possibly can so you can capture that alpha quick. Maybe it's 1 minute, 30 seconds, 10 minutes. Who knows how long that move is going to last, but you need to hit it, quit it, and that's usually how that works. The second thing is you need to grind it out because you're not going to sit here, most likely, and make 20K in one trade. You're going to make a couple of $100 here and there, $500 here and there, and you're just going to knock it out all 5 days of the week, all 20 trading days out of the month, and by the end of the month, you'll have $10,000, $20,000. That's how you do it. And I think somewhere in my career, hell, I probably made 20,000 trades over 20 years at least. So I can't sit there and pick out, go, oh, this one was the best. Oh, this one I might be able to, or this one was the worst. But there was tons of them in between I just forgot about. So you're not going to be defined over one trade. You're going to have to get up and just chip away at it. So I kind of want you guys to know this because I think the important thing is we overlook about that mindset. That's the mindset that you're going to have if you want to be a pro. You're going to have to look at this market completely. That's why we always say turn this other stuff off. You're going to have that kind of mindset. So the things I want you to take here forward. Timing, get your timing down to where you're 70, 80% correct with your timing, and you'll do really, really good with that. And then you're going to have to grind it out. You just keep repeating that process. You're repeating that timing process over and over again, all 5 days of the week, all 300 days out of the year, all thousands of them out of your trading career. You just are a robot and you keep doing the same thing. So I hope this helps you guys. As always, if you need help, you know where I'm at. Take care. Thanks for watching this happy hour and cheers.